A hidden structural shift is moving through the global financial grid this week, and most retail investors are completely blind to the pressure building behind the scenes. Welcome back to the Daily Oracle of Wealth. Today, we are analyzing the Saturn Debt Reversal, the precise moment where artificial liquidity constraints fracture, forcing a massive realignment of stagnant capital. If your portfolio has felt restricted or frozen since the start of the year, the structural dams are breaking. This isn't about luck. It is a systemic audit of global equity. Let's decode the math behind the shift. To understand this shift, you have to look past daily market noise and analyze systemic pressure points. In macrofinance, Saturn represents institutional structure, forced austerity, and regulatory friction. For months, capital has been intentionally frozen, locked up in over-leveraged sectors and artificial asset bubbles. But this week, that restrictive pressure reaches a mathematical breaking point. We are witnessing the unwinding of stagnant liquidity. Money that has been trapped by high interest rates and regulatory bottlenecks is suddenly being forced back into active motion. The dam is breaking, but the wealth isn't evaporating. It is being redistributed. This brings us to the core of the reversal, the karmic audit. In structural economics, every bad risk, hidden debt, and inefficient allocation eventually demands absolute accountability. The systems that thrived on pure hype and zero foundational value are facing a structural squeeze. If a corporate model, a digital asset, or a personal portfolio was built on a foundation of loose sand, this transit acts as a financial eraser. It dissolves artificial valuations. Stagnant capital is fleeing toxic liabilities and searching for something real. This is why your bank account changes this week, not because of chance, but because the market is aggressively correcting its balance sheets. So where does the dissolved capital go? It flows directly to the disciplined builders. The macro environment is shifting to reward technical precision, risk management, and ironclad infrastructure. Those who maintained fiscal discipline during the period of forced austerity are now positioned to reclaim lost equity at a massive discount. To capitalize on this shift, you must deploy rigorous data analysis. Stop chasing high-velocity fads. Identify the exact entry points where institutional capital is reorganizing, protect your core baseline, and prepare to absorb the equity that your undisciplined competitors are about to drop. The audit has begun, and accountability is mandatory. The old financial structures are giving way to a colder, more precise reality. If you are ready to audit your portfolio, protect your capital, and position yourself on the right side of this liquidity shift, I want you to drop the word reversal in the comments below right now. Hit subscribe to lock into our strategic intelligence network, secure your perimeter, and I will see you at the top.